Welcome to today's episode of Peak Market Watch. We speak with market leaders in commercial real estate and related services who have a close pulse on the current market environment. My name is Anton Madley, co-founder and CEO of Peak Financing, and my co-host today is John Martinez, one of our great senior debt advisors at Peak Financing. We are honored to welcome Jack and Michelle Bosch, who are not only multifamily investors, but also land investors, land flippers, and land flipping coaches. Welcome, Michelle and Jack.
Thank you so much, Anton. It's a pleasure to be here.
Thank you for having us. Hi, Anton. Hi, John.
Welcome.
Yeah, it's a pleasure to have you with us. Why don't you give us some background about yourself as well as your business?
Yeah, I can. You can take it, Jack. Go for it.
You go ahead. Ladies
okay,
first.
Wonderful. Awesome. So, like Jack said, thank you so much for having us both here. So Jack and I are both immigrants to the U.S. We came here in 1995, 1997, respectively, came here to study, fell in love with each other, decided that we were going to stay in a third country, not Germany, not Honduras, but the U.S. and make this home, and went out there and, got jobs like everyone else that is coming out of, a university here in the U.S., and very quickly realized that, we were putting a lot of effort, time and energy into those jobs, and our paychecks did not match those efforts. And we had no freedom, no fulfillment. And we started looking for another way out, basically, out of corporate jail. And we found real estate. We actually found a niche within real estate called land flipping, land investing. And for us, it was an easy transition because it meant we didn't have to deal with any of the deals and complications that come with, having tenants, toilets, repairs, some foundations, renovating. All of that for us as foreigners was a little bit of a foreign concept.
At least initially, yeah.
At least initially, absolutely. And so for us, it was like, oh my gosh, you tell me that I can buy, a piece of land for anywhere between 10 and 40 cents on the dollar, and I can flip it for 60, 70%, sell it quickly and make money. And that was the beginning of our side hustle that eventually became our main hustle. And really that fueled our ability to start investing, not just in that asset class, but also in large multifamily starting in 2016. So that's kind of like compressed story. I'm sure Jack can expand on it.
Well, I can add a couple of things. It's like, again, I'm from Germany, Michelle's from Honduras. So we once we started real estate investing, we started with something that we could wrap our arms around. And at the time, that was not yet commercial property. It was not yet multifamily, because that was just too complex for us at the time, right? Coming here as immigrants, 2 suitcases, no idea, not even the terminology of real estate still being foreign to us. We had to start with where we were. And so we did with land flipping, just like other people flip houses, we flip land, which is the same thing, just except no tenants, toilets, termites, none of the complexities of the house world. And then we built that up to a very solid, very good volume. We flipped over 4,000 of these pieces of land. And then when 2009 happens, we started buying single families first in Arizona where we live, then in a couple of other markets. And as we realized that we're actually comfortable now in the improved property market, in the vertical market, right, where you have to have property managers and things like that. And we're comfortable even managing at a distance. That's when we said, let's take the next step. And then we became multifamily investors too. And we syndicate deals now. We are invested in over 1,000 units right now, some of them passive, a lot of them active, and just sold 146 units in Oklahoma and looking to buy a few more 100 units this year.
Yeah, that's great. So how did you find that niche initially? Obviously, the house flipping everyone talks about, right? The wholesaling everyone talks about, land flipping. It's only back then no one talked about, at least back then, right? So now, thanks to your coaching business, I think more and more people know about it. But back then, no one knew about it. So how did you
forgot to say in the middle in 2009 we started also coaching land flipping, because as the market tanked, land flipping and house flipping, the house flippers are losing their shirts. Land flipping continued working, and it obviously continues working. We're in the best times ever. But how did we find it? We really stumbled into it. We wanted to make real estate happen. Again, no experience, no money, no credit, no connections back in those days. We looked at at a triplex that we wanted to rehab, and we estimated everything wrong. So nobody wanted to buy it because we had underestimated all the repairs, therefore overpaid for it. Well, didn't pay for it, over offered for it. We were able to back out of the deal. We then attended tax deed and tax lien auctions, and that's kind of the entry point, because we started realizing that there's people who actually are so much fed up with the properties, they just don't want them anymore, that they're willing to let them go to tax sale and get nothing for them. That was a mind-blowing concept. Remember, Michelle, to us, we were like, oh my God, these people.
Because there's no, or that you can lose your property to delinquent taxes. That's something that is absolutely unheard of outside of the US, So for us, that was like, wow. And when I was attending some of these auctions, what I found out was that a lot of the properties that were coming up for sale were pieces of land.
And I'm they were equally bid up high.
Yeah.
They might have started at the $3,500 minimum bid, but they ended up at $50,000. Or they started at $20,000 and ended up at $150,000. Then, and we're like, okay, well, the thing is, we tried to attend these auctions and we were outbid because, again, we didn't have money. We didn't really know anything. So we came up with a thought, though, of how about if these people don't want these properties anymore, what if we contact them directly and send them a letter and see if we can figure out who they are? And that was the beginning, and that's how we got our first few deals. And then quickly we realized that actually there's 10x more people that don't owe property taxes, that are not delinquent, and they just also want to get rid of them. But what interestingly came, when we first sent those first letters out, we sent them to house owners, land owners, commercial property owners. The only people who responded in droves were landowners.
Yeah. So
we're like, well, okay, if they respond, let's see. And since land was, again, something we didn't know much about, we were very conservative. And I think the first offer, property was worth $8,000, a small little lot in a rural area. We offered $400 and the guy accepted it. And then we turned around and sold it for $4,000, which is nothing compared to the numbers that the multifamily people are used to. But hey, starting out, it's a 10x return, right?
Yeah, and our confidence levels were definitely not super high. So
yeah, we started
that was a big deal for us. Yeah.
And then now we just did a deal where we bought a property for $90,000 and sold it for $299,000. Actually, $199,000. So we made, after realtor commission stuff, we made just short of $100,000 on that deal. And that's better, right? And then also we figured out that we can sell those with seller financing, so we get cash flow. And that's just became a machine, basically. Became a cookie cutter machine where over a couple of years, we did hundreds of deals per year. Sometimes we did one year, we did something like almost 800 deals in a year.
And, we've scaled that to 8 figures, about, $70,000, little over $70,000 in passive income from land notes alone. And it all started with that deal that we got for $400. So it's like, it was a small thing, compared to the large numbers and millions of multifamily now, but it sculpted our spirit. And I always say you got to have faith in the small. Yeah. If you're going to go for big things, it's got to start small sometimes. And that's how it was for Jack and myself.
A quick question. And just, I know that we have a kind of sometimes a diverse audience. There, varying degrees of sophistication with real estate, but, if you're listening, it's like, wow, like where can I find this? But maybe if you can kind of speak to like what the root driver is, because I have a suspicion, and maybe I'm wrong about it, but is it just a little bit of like with land, it's out of sight, out of mind, and it just it's off the radar versus, your, mom's home that you've had for a couple of years, you're thinking about doing, but it's in front of you, right? It's more of an attachment. Is that part of it?
Absolutely. Yeah. Michelle, do you want to go?
Yeah.
I can
go for it.
Okay. Yes, it's that. Also, land, particularly in our sweet spot. So the land flipping part of it is like our sweet spot is land between, let's say, like on the very, very bottom end. We don't really personally like to do much deals in there anymore. Like starting literally from $5,000, it's barely worth your time, but still, you can still make a few $1,000s. All the way to about $300,000. That's about the sweet spot where we get most of the deals. Now, do we have now students that do $1 million deals? Yes. right? We have a student that have a development parcel that I got on contract for $5 million and potentially selling for 7, right? And then the developer takes that over, and across the street, there's a DR Horton, big development and so on. So that's all within the scope, but the bread and butter deals are the ones between $500,000 and $300,000, and those are exactly those. Banks actually don't lend on land on those kind of lots often, particularly because they're often also in the outskirts of town or a little bit more in rural recreational areas.
Yeah.
And there's no big institution gives you any money on those, or if they do, they lend you like 30-40% or perhaps up to 50% if you really have a good relationship. But in 98% of these lots are free and clear owned. So they're not an urgency situation, but it's almost like a bother situation. They're like, they've owned it for 20, 30 years. It's out of mind, it's out of sight. They don't go there anymore. Perhaps they had plans to retire there. Perhaps also they inherited it. And as an heir now, instead of inheriting a bunch of money, they actually inherited a property that they need to send the landscapers out 3 times a year to mow the grass, and that they have to pay property taxes every year. And it's in a different state that they'll never go to. So it becomes a hassle and a burden, and it becomes a headache to them. And since they're not emotionally attached to it all, even a 30-40% market value offer is good enough for many times for them to sell it.
Yeah. And even they might have even tried selling it with a realtor, and because it's a completely different animal, if you're a realtor that specializes in houses, you're going to stage the house, you're going to put nice lighting, take beautiful photos. And how you sell land is not the same way that you sell, a house. It's more of a dreaming the picture of, or painting the picture of what is possible in dream building, in your listings. So we have also, a lot of sellers that say, I've tried to sell it with a realtor in the past and it just didn't work out.
So most realtors, they just don't know what to do with it. They take it on as kind of as a favor, and they put an aerial picture on there, and that's it. But you sell land, particularly this kind of land, more by telling a story of what you can do from the land, what's close by and things like that, not by the actual pictures of the land. Many buyers of us they buy the property sight unseen.
Yeah.
Right?
Yeah.
Because they're like, okay, it's 5 acres. It looks like from the topography, from topo map, it looks like it's flat. Great, that's all I need to know. What's most important, that it's close to Lake X and close to town X, and it's close to hunting, and it's close to this, and it's a place that I can go and build a cabin over for the weekends and things like that. So that's more important than the actual land. And the house realtors don't understand that, so they do a really bad job marketing it, which sometimes leads to them not selling with a bad realtor. And then they're like, well, I guess my property's not worth much, and they're giving it to us for pennies on the dollar. And all we do is remarket it the proper way and sell it within 2-3 weeks at top market value.
Yeah, and that's not just the case for recreational property, Anton and John. This is also the case for lots in the path of growth, where it's a different kind of buyer, or even infill lots where you have builders and developers in mind. Just not many realtors specialize in selling land. So regardless of whether it's recreational or not, even if it's for a big development, I think just there's not a whole lot of them. I mean, there's some amazing land brokers out there, but there's some others that have missed the boat.
Yeah, you make a very good point, right? Even in areas where there is a lot of growth, just a few handful of land brokers that really do a good job and tell the story, and that's it's a challenge, right? And even when they do, it appears to me, and we have seen it in a number of cases, they have their relatively small network of developers that they work with. But beyond that, they are not seeking out a broader audience of potential buyers, right?
Yeah.
So very often, even though you're wondering why is it, this is in the path of growth, and they put up their signs, and that sign is up for years, right?
Yeah.
And there is very little of activity, even though they are a reputable broker, right? So I think you obviously with what you're doing, you're kind of covering that, you create more activity, and I think that is ultimately that velocity that ultimately helps, particularly on the
And
land.
what's also really helps is that we are creative about it, because we are, as Michelle mentioned earlier, we're also selling them with seller financing. So we're allowing, when a bank would only give, like if you sell a property for $75,000, right, and you have it on contract for $15,000, then you only need a $15,000 down payment from that buyer in order to be in the deal for no money. And so to us, that's a super low, or almost like a no risk proposition. Because if somebody gives me $20,000 down payment on that, I got even after closing costs, I got $3,000 in the pocket already. I own the property, I resold the property, and now I'm getting $800 a month for the next 12 years or 15 years. Yet from the buyer's point of view, I just opened up the opportunity of a lifetime. Because if they don't have, many people don't have $75,000. Heck, many people don't even have $10,000 in the bank. Obviously won't give them a loan on these kind of properties. So by offering seller financing with low down and somewhat low monthly payments, we can open up the market to 10x, 20x more buyers that would love to have a piece like that, but they just otherwise can't afford it. And to us, even though bank would never go into that risk of lending at 80, 90, 80% of it, but we have no problem with it, because if we only have 20% in it, we can ask for a 20% market value, and we're risk-free pretty much for us.
Yeah. And you have now also the opportunity to, if you wanted to, cash out, on your note, to sell it, also in the open market. And there's a bunch of now people in our space, in our community, that are buying land notes because they understand land now and are comfortable with it. And so we have a situation now where you could basically put it under contract, and sell it, and in that same transaction bring in that third party that buys the note at face value, and because they understand land, and run with it. So it gives you an opportunity to basically close on deals without any of your money in the game. So it's amazing. We love it. And now we're even looking into, using that expertise that we have in land to find, land in the markets that we're interested in, eventually develop, multifamily and so on and so forth.
Yeah, we're actively talking to a couple of developers right now that have an expertise in building smaller Class A plus apartment buildings, basically multifamily properties of, like, depending on the lot size, sometimes 15, 18, 25 units. And they need our expertise. So they don't know how to get the land. Plus we have now a pool of investors, so we can find the lot, syndicate the purchase of the lot, purchase it cash, contribute it to the development. And at the end, it's a very favorable position, and it's a very much a win-win for all of us. But land is very beneficial from that point of view too.
Yeah.
Particularly in the current environment.
Yes.
Yeah.
Absolutely.
Yeah. I mean, we've seen quite a bit of multifamily syndicators now looking into, it's so competitive, actually looking into land to start, projects, from the ground up. So yeah, I'm excited to be, I'm all about dirt riches, I tell Jack.
Yeah, very good.
And it's the foundation, land is a foundation. And for us, it's a unique situation in that we're not from here, and through land we've been able to make the American dream possible, selling land, and it's we love it.
Okay, good. So the seller financing, obviously on the single family side, that's also a very common thing, right? Where you have initially may rent, and you have that you may have a buy option, and ultimately you have tenants that may not qualify for a traditional conventional loan, but with seller financing you can finance them. The rates are on the higher end, but it still meets the purpose for the seller for the financing, as well as for the buyer. At least they get the financing and they get their own home. Where would you say are typically with these land notes, where are you able to finance them from a rate perspective?
Okay, so
hold on, sit down.
That's right. So again, so the way we do that, and that ties into the question prior. I want to preface that before I give you the number.
Yeah.
First
you
of all,
can give a range.
First of all, banks charge a substantially higher rate on land loans than they would charge on single family loans, right?
Sure.
So single families is still in the 3s. Land loans might be, I don't know, in the 6, 7s or something like that, or even 8s or so for them. So let's put that out there, that even institutional investors like big banks, if they do lend on land, they don't lend at 3.5%. Mostly, right? Unless it's a really big established relationship, it's an A-class property with an established development plan, et cetera, right? So what we do though is, remember, we have these properties under contract for, say, 20 cents on the dollar, but then we sell them at market value with a 20% down payment. So the risk to us is zero in those deals. Having said that, we are charging we're giving them an 80% loan to value. Sometimes even 90% loan to value. We sold a property just last week that we sold for $40,000, and the buyer only put $1,500 down. Now, in that case, we did not recover what we put into it already, but it doesn't matter because we paid for this property $7,000 and we got only $1,500 out, so we're out still $5,500. But again, having done as many deals, we got money in the bank. We can do this. That's okay. And if you look at it, the monthly payments now are around $450 for the next 18 years on that property. So we're getting $5,500 a month on this property. So in a year and 2 months, we have 100% return on our investment. Now the interest rate varies, right? So it's a range. So if somebody puts that low amount down, then we're charging them 12.9% interest. So they're paying up there. We have students that charge 15% interest. That sounds crazy, but it's not, because first of all, who gives a 90% loan to value on a piece of land? Nobody. And if you do, the interest rate should be going up, right? You more than everyone know that interest rate is a reflection of risk, right? So if somebody only puts 5% down, the interest rate should be way high. And then equally though, when somebody puts down more, we step down the interest rate. So we have people that put down 30% and they get a 7 or 8% interest rate. We have done loans with 5-6% interest rate, but the standard loan is usually around a 10% down, 90% loan to value, and a 12.9 to 13% interest rate.
Yeah, not bad considering that. You already have a big chunk of it already covered. Right?
Exactly that. So if they're just, usually we like to structure the deal such that we ideally get all our money as a down payment already that we pay for the property. But if that doesn't always happen, then at least we got 100% return off our investment within 18 months. And I think that's fine, because that basically puts, in a worst case scenario, puts the yield at what? At 60%, 65, 66% or so, 66% per year. And I'm okay with a note that's performing at 66% per year. Right? I think we can live with that.
Yeah, absolutely. So, and you're not gonna, get free from or retire from a job or retire a spouse, with one of these deals. But when you have a little bit of more volume or higher priced property, then that's when it really starts to, add up and can be really transformational for a family, for sure. And that's, how it was for us. That's what, eventually we couldn't leave our jobs at the beginning because our green cards depended on the jobs. But that's eventually how we were able to build our passive income and our cash flow, with notes that were 10, 15, 20 year, in length. And pretty much once we had our green cards, step out of those jobs and just put this on turbocharge, for I would say 6 to 7 years. I was like, we had blinders on and that's all we focused on. So yeah, I love passive income from land, but I love it from multifamily as well. And I love the fact that we are now able to not just be transformational, to a seller, create a win for them, create a win for a buyer, but do that also in the multifamily space with sellers as well, with buyers and with tenants, and create really first-in-class communities that feel like a community and like a home versus just a place, that you're renting out and so on and so forth.
That's a big point. So yeah, we basically use our land flipping as our cash machine in order to now fund other investments, because obviously land flipping is still an active business, right? If you stop flipping, the income stops. Yes, you get the cash flow for 5, 7, 10, 12, 15 more years, but even that eventually is going to stop. So somewhere through the process, when we realized that, we started like, okay, let's start shoveling funds from one area or transitioning funds from one area into another. But even there, we like doing what we're doing. We like doing it as in a transformational format. So we just sold 146 units in Oklahoma City, for example, where we were able to average over $100 more per month in rent than our units, even though our units were not better than other units, just by community activities, by making sure we have better service, faster service, better maintenance, faster maintenance.
Like tutors for the kids in the community.
Yeah, tools for the kids, popcorn for the kids. We even hired a tutor from a local community college to tutor the kids in the neighborhood, because it's a Class C property. Nobody can afford a tutor. So some of these things, and it was a very successful exit right now in a market that was not necessarily a very good market, a very hard to manage market. Let's put it that way.
Yeah. No, that market, it's definitely not easy, right?
Right.
Now, how did you decide, or when did you decide to make a move into multifamily? And did you start out on the passive side, or did you immediately jump in also to be an active investor there? Right, and just to kind of also for our listeners, right, everyone talks about, well, multifamily as a passive investment because you have a proper third-party property management company. I would say anyone who is actually investing in properties that is an active asset manager will agree that it's not truly passive, right? It's passive for the passive investors, but it's only not for the ones that are the asset managers. So how did you decide to move into the multifamily space?
Yeah, if I may answer, and you can add to it, Jack. I think we build our confidence and capabilities with land, and then we built that with single families in 3 markets. So we were already back in 2016 when we decided to shift our focus to multifamily. From 2009 all the way to 2016, we were already doing large portfolios of single family homes in 3 markets where we were already working with a third party property management company and so on and so forth. So for us, it was a logical transition of like, okay, do we continue buying one door at a time, or can we buy 100 at a time? And so it was the next logical step. I think our investing journey has followed our own personal development and sophistication as investors. And for us, it was just the natural thing to do, back then. If you want to add something, Jack?
It goes again along to what I said. We as you said, we built our confidence, and we started realizing also that it is okay, it is possible for us. I mean, we know it was possible, we just didn't know it was possible for us to manage portfolios of rental houses remotely. So we have a portfolio of rental houses in Cleveland that, for example, we have never seen. Right? We have a partner there that found them for us, bought them for us, remodeled them for us, rented them for us, handed over property management of the property management company, and we've never seen them. We have a portfolio of rental houses in Omaha, Nebraska that we've never seen, yet they're performing. So we're like, okay, great. So if that is possible, obviously when you do multifamily, you got to go visit your property a few times a year, of course. But other than that, we started, if that's possible, then exactly Michelle's thing came in, like, do we want to buy 1 or 100? So the answer to your question is we jumped right in and bought, and we went active and syndicated our first deal in North Carolina, and bought 90 units. And that was an interesting, our first deal was we partnered up with a partner. That's the thing, with somebody that already owned 500 units. And he basically taught us. He was in a situation where he was running out of money to raise. So he had a deal come up, and he needed about another $800,000 to be raised. And he just was, for whatever reason, he wasn't able to raise it right away. So we said, like, hey, we want to learn how this works. We understand there's a difference between single family and multifamily, and there's a huge difference, right? As you guys know, humongous difference. But we would like, how can we get in on that deal? It's like, yes, if you raise $800,000, I'll give you a significant part of that deal and you become co-manager and so on. It's like, okay, great. So we did that, and we just reached out to our network and we raised it in like a week, and we're like, okay, we can raise money, good. And then secondly, we then owned that deal, and we're about to sell that deal in the next, hopefully in the next half a year or so. And but yeah, we went active. We had no interest in going passive at this point of time, because I think that's an entrepreneurial thing. I'm sorry then, Michelle, it's just one thing I want to say. It's an entrepreneurial thing. A lot of entrepreneurs have a hard time giving up control of their money because they worked really, really hard for it, and they're used to being in control. So we wanted to be in control of our money, and only only after we had enough experience and after we like, okay, we can gauge who is a good operator, who is not, who can we trust in this market. That's when we started doing passive investments. So we have done a bunch of passives, but we prefer to be active and be the principals. Michelle, sorry.
Yeah, because we wanted to, first of all, learn the skill of fundraising, and we're like, okay, we can do that, and that's really the easy part in multifamily. The second hardest part is actually turning that property around. Yeah, turning that property around, and actually making it perform so that you are a great fiduciary of, the people and the investors that, have put their hard-earned money, in your trust. And also all of the financing nightmare and creative, deal structuring that you have to do in the background to, to basically jump at a moment's notice, from a financial institution in terms of like the gazillion millions of requests that they have to bring a deal to closing. So it's not just being great, in multifamily. What we've learned is not just being great at fundraising, but it's also of how to make the financing, work, and then turning actually that property around so that you can have a successful exit or a hold, a long-term hold and actually perform for your investors. So it's like it's three things that you have to be really good at. And we've learned now, we have our fare of humility sandwiches, I'd like to call on those three fronts for sure.
Oh yeah.
Yeah, you definitely have that, right? I have had the privilege to some of insight into what you have done, right? So it's only great to see some of the turnarounds that you have gone through, right? And I think that's really an important message to anyone, right? On paper, it always looks great until you're actually in there in the weeds, and you have to turn a property around, and it's just not that easy, right? As an asset manager, you really have to be on top of it, including being on top of the property management company.
Mm-hmm.
A lot of people feel, well, it's the property management company will handle it for us. Could not be further from the truth, right? Yeah. They are executing it on a daily basis, but it's still you as the deal sponsor and as a manager really being charge of it.
And even the best property management company I found is just slow. I mean, they're slow. They're like 10 times slower than we are, and it's understandable because your property, or if you our properties are only one of the 20, 50, 100 that they manage, and even their regional manager has 10 or so properties that they manage, and our request to get a quote for a playground is just only one of 300 requests that they need to process each month. So you got to be on top of them, and that's one of the things we learned. And we just recently brought on an asset manager into our company whose job now will be, and she's being trained for that right now, to have weekly to really make sure that the weekly meetings, because even we are running multiple businesses and things, so sometimes the weekly meetings don't happen and things like that. So she's going to be running those weekly meetings with me as much as I can, and if I'm traveling or not available on the way to a property or so, then just without me, and driving forward the plan. Like for example, on 90 units that we actually working together, Anton, where we on the financing and thing, and we have been working for quite a while together. And that the moment that financing is closed, we are we are going to put about $500,000 into that property, right? We're going to upgrade every unit. We already right now adding a playground, we're adding barbecues, we already did lighting, we already did the roof and things like that. But these individual upgrades, you can't just say to the property manager, let go upgrade it, right? 5 years later, you're going to look back and nothing happened. They haven't done a single thing, right? So you got to be every week. What have we done? What did we have on the calendar? And that's the active part of it. Yeah.
That is, yeah. But I wouldn't change it for the world, because the opportunity that it's giving us in terms of like really create generational wealth, for now our 14-year-old daughter is worth it all. And I'm a student of life. I love learning new stuff, and I wouldn't change it. Yes, there's not a complete passivity to it, but it's definitely an amazing skill to continue to learn and hone in, and like I said, be able to then pass on something, for our daughter, so that she doesn't have to start at ground zero like we did. She's standing on our shoulders and starting at a completely different level. And that's what we're all in it for, is, to have that, freedom of time, money, purpose, relationships, and the opportunity to pass something on, to the next generation as well.
Right.
So, with your experience across different asset classes, kind of going through your own learning curve over a considerable amount of time, you're preparing yourself, you're preparing for generational wealth. Share with us a little bit about what are you doing with others so that they can do that as well. I know, want to make mindful of your time, but how are people able to kind of take advantage of some of the lessons that you've learned?
Well, both Jack and I have individual podcasts. I have one exclusively for women, just because I want to see many more women in the multifamily space. You see a lot of ladies, for example, being realtors, brokers, but when it starts to, or even, in the single family space, but in the multifamily space, you don't see a whole lot of them. So I focus my podcast more on, bringing the ladies along, and we got to start somewhere, right? Whether it's land flipping, single family or multifamily. And then Jack also has his own, what we call, or he calls a Forever Cash podcast, where he also basically every week we have episodes. We of course have an educational company now that focuses on helping families learn, build, grow, and scale their land business. We've had the privilege of scaling our own business to 8 figures, and now seeing many of our students scale their own land businesses into the 7 figures, so that they can eventually have the cash to go and invest in other asset classes and so on and so forth. So those are some of the things that we currently do. If you want to add anything else, Jack?
Yeah, so how people, well, we focus on, we don't teach multifamily, right? We teach land flipping. There's plenty of people out there teaching multifamily, but because I find that can you learn multifamily? Sure, but I find like you gotta, anything in life, what worked really well for us is that you gotta create a cash machine, as we said. Like you gotta create something that produces massive income that you can then use and set up other things. Can you do a syndication with no net worth and no thing? And yeah, can you get a little piece? Can you work yourself that way up? But again, it's like it's starting from zero and looking at a rocket from a complexity point of view, and versus most people want to start with something simpler. So you start something simpler. You build your confidence, you build your capabilities, you build your courage, you build your cash, right? And then you start rolling that over. So what the way we can help people is we have a coaching program and we have courses and things on the land flipping side. So anyone interested in that can go to landprofitgenerator.com, or we can put a link into the show notes or so. But other than that, also our podcast, obviously my podcast is the Forever Cash Real Estate Investing Podcast, where we talk lots about we talk about everything. We talked about land flipping a lot, but we also talk about multifamily. We also talk about raising funds and things like that. And Michelle's podcast, she already mentioned it, the Inflow with Michelle Bosch podcast talks a bit more to the ladies, but it also has an investing focus a bit more.
Yeah, definitely an investing focus, and not just real estate in general, but just other financial hacks that I like, to talk about, that I would love, women to know about: self-directed IRAs, taxes, using real estate, for depreciation against your active income, and so on and so forth. Yeah, I'm definitely passionate about that, and I want to see more ladies flipping, big multifamilies, because in essence, as a syndicator, that's what you do. It's one mega flip that just takes anywhere between 3 and 5 years. But that's at least how I like to see
flip
it.
land, for that matter. Yes.
Yeah, absolutely.
Yeah, very good. So obviously with COVID-19, everyone was looking for more space. With that, also land has become much more attractive for a lot of people.
Yeah.
So I'm sure your business has boomed over since COVID-19 hit, even beyond of what you already were able to achieve. How do you see, when you look into your crystal ball, where do you see this is all going?
Well, I don't have a crystal ball, but what I do know for sure is that 2 years of COVID have definitely created new habits for people. And this virtual working is not going away, which means that now people have the freedom to look for a home or a piece of land, or to build a home, or live from a recreational, area, or from what would we consider a vacation spot, and not be restricted to being in an office, so that's here to stay. And with that, that's part of the reason why in the almost 19 years that we've been, flipping land, we've seen a market. We've never seen a market like the one that we've had, with just people wanting, also, I see like a tendency of people just generally, the regular everyday end buyer, not, the investor for so much, but the regular end buyer, of wanting to go back to the land in some way, shape, or form, have a little bit more space, horses, and, and so on and so forth in their property, and just be here now and enjoy, the now, for sure.
Yeah, definitely the times have changed. So if I have a crystal ball, which I don't either, I would think that these developments are here to stay.
Yeah.
Right? Developments are here to stay. I just interviewed a gentleman today for a position of acquisition manager in our company to get more multifamily deals. And guess what? He used to work in Manhattan. COVID sent him home. So he went back home to whatever home is with his parents or his family, or bought something in Connecticut. And now his employer says, come back. And he's like, no, I don't want to come back anymore. Right? So the big resignation that we see right now, this kind of word, is partly because people realize that there's a different life to be lived than sitting on the interstate being stuck in traffic for 2 hours a day. But partly it's also that people say, like, I enjoy working from home. And so what COVID has really done is moved the virtualization of the work world up by 30 years. We used to, I think, say like 4%, 5% of American people were working from home. Then for half a year, it was 80% or so, whatever number it was, except for retail workers, of course, and truckers, and so they can't. But it was like perhaps 60% was up. And now I don't think it's going to go back below 30%, because just like everyone, even attorney friends of ours, say like, yeah, the office is there, but now you don't have to have your own office anymore. You can get a hoteling office, which means that you can just get your little card and you can come in when you want to come in. Now, what that means is that you don't have to live close to your office anymore. Because it means you can live, if you're willing to commute once a week or twice a week for an hour and a half, but therefore be 5 or 6 days a week outside of town on 5 acres with a horse and a cow and goats and things and whatever you want to have, just space, then you can live this now, versus before it was not feasible because you had to nobody would have driven an hour and a half a day. But driving an hour and a half once a week in order to have your dream property is totally possible. So the land outside of the outskirts of town has just completely exploded. And also the fact that you couldn't travel internationally or people don't want to be on airplanes, has really boosted the RV world and so on. So a lot of these rural properties are like absolutely on fire. And ultimately, I mean, you know that if you switch back to the multifamily, so I think that's here to stay. That is something that's gonna continue to go on. So our business is well positioned for the next several years. And on the multifamily side of things, I mean, the statistics all point to it. With a run up in prices right now, unless there's a major crash, which really nobody I talk to sees coming, or almost nobody, unless there's a massive major crash, people are getting priced out of a home ownership ultimately. So we are becoming a rental country, a rental society, and particularly the baby boomers starting, I think the numbers are starting at 2025, might be becoming, or so might 2025, 2026 might become net sellers. So they're going to sell more houses than they buy. And what are they going to do? They're not dying after selling. They're taking that equity and they're renting, right? So multifamily is well positioned for the future, particularly in the markets where people actually want to live, which is the big high growth markets.
Yeah.
That's what I see.
Mm-hmm. Very good.
And money continuing to flow, I think, also into real estate in general, just with inflation and so on, and the purchasing power of your dollar being eroded, it'll continue to go into hard assets for sure.
Right.
Yeah. Definitely. Obviously, inflation is on everyone's mind, and any type of hard asset is attractive in that environment, right?
Yeah, absolutely.
Yeah. Very good. Really appreciate for both of you to having joined us today. Now, how can our listeners reach you? And obviously, please don't be shy to mention how they can reach you also for your land flipping coaching business, right? So you have done it. So you're an expert at it, and it's only great that you're teaching others how they can achieve the same thing.
I'll let Jack go.
Well, we kind of mentioned it already. You can go to www.landprofitfund.com. So fun, like having fun. So not a fund, but F-U-N, like land like land, profit like money, profit fund, F-U-N, landprofitfund.com, and find out more about us. Or you can also, as I said, listen to our podcasts and so on.
I'm on social media too, on Instagram, Michelle Bosch Official, Michelle Bosch on Facebook, on LinkedIn. Send me a DM and I personally respond.
You do, exactly.
Okay, so it's not just the bot that is responding.
Exactly.
Not yet. We're still down to earth people that will respond to our own stuff.
Very good. Really appreciate that. Thanks again, guys, that you came on, and a lot of success going forward with all your different type of businesses.
Thank you very much.
Thank you so much, Anton. Thank you so much, John. Thank you.
Thanks, Jack.